Okay, so one day after the FOMC cuts rates as widely expected, but dampens expectations for the next rate cut in December. We also got a big basket of earnings out in the technology sector. We got a trade deal. All of that should be pointing us towards a very positive direction. But that's not the case. We had a pretty significant rotation that I'll describe in today's video out of the mega cap space into more defensive areas, including on a macro level into areas like gold and the dollar. With people moving out of bonds and with the yields moving higher for a second straight day. So I break all that down in tonight's preview video. So let's go ahead and get started. Today is Thursday, October 30th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Hey, before we get going too far, click this link. That will take you to today's Market Outlook blog post. You can see it here. This is all the information that goes on today, what happened today, why it matters, what it means to you, and what to expect going forward, or what to watch for going forward, some educational aspects of this as well. So again, you get this for free on our site. By clicking that link I shared with you. When you click that link, it will take you to this page where you can, this is what it looks like here, when you're not logged in. So if you already are subscribed, just click the login here button. If you're not subscribed, click this blue button. It'll take you to our basic subscription page. Click here to subscribe for free. And like I said, you get access to today's blog posts. When you click on Market Outlook Archives, right under here, Video Archives, you get access to all of our blog posts, all of them over the course of time. Again, all for free, and they include at the top the Market Outlook preview video. Again, this link takes you straight to the basic subscription page, where again, one click, just a few seconds, you can subscribe to our site for free. So the S&P 500, we'll start off here with the market forecast. You can see showing a pretty bearish pattern on a near-term basis. The near-term line dropping below 60 as well as below 50 and 40 at the same time, with the momentum line below it and an extreme low. So this is the second time. Last time we had that pattern was October 10th. Obviously a much different day today than what we had then. We were down a couple percent then, almost at least, and we're down 1% today. So and well above the moving average, still more than 1.5%. But a pattern that on the surface looks very bullish. Like this is a buy the dip signal, but the type of drop that it is suggests that that things could continue south tomorrow. Now, of course, we have earnings in the after hours. I think they both have been good so far for Apple and Amazon, so that might have an impact to kind of quell. That's what happened on the 13th. We rallied and gapped up and then rallied, so that we were able to keep the near-term line from dropping as deep, right? Because when the near-term line gets deep into the reversal zone, now we're in trouble in terms of this intermediate rally that we've been on failing and turning south. Now, the big news today was gold. Gold had a big jump higher. You can see back, we got the bull tag a couple days ago. We jumped back above the moving average today. Strong near-term rally. The near-term line is above the 90th percentile. Crossing above the intermediate line. Market sentiment still up in the upper reversal zone. So a nice jump back up. But this time, it did it with an increase in yields. So during most of that gold rally, yields have been falling, but you can see the yields got a bear tag today. Again, bear tags can be reversal or continuation, just like it for new legs to the downside, or they can be reversals to new bullish moves to the upside. Considering the intermediate line now is crossed above market sentiment, and considering the strong short-term rally, there's a possibility, a stronger possibility, that those two might continue to move higher. And when you stack on top of that the strength in the dollar that we've seen, the strong bullish trend that we've been starting here, that's a recipe, as we saw today. It's a recipe for risk aversion. At least it's reflective of risk aversion. And you saw that as well in the sector rotation. When you take a look at the sector rotation here, remember yesterday and the day before, we had such a narrow leadership because it was really just technology that gained, as you can see there. Here, let me change this to a 5-minute chart. You can see it was pretty much all technology, and then everything else was down. Everything else was down. Well, if I take a look at today alone, All three of the mega cap sectors, technology, communication services, and discretion. Remember, Google actually had good earnings today, but Microsoft and Meta did not. And so all three sectors, including XLY, was down. XLY is down 2%, way underperforming XLP. In fact, when you look at the ratio charts here, some of them, like the Qs relative to IWM, is coming down, but still well above the averages. But if you take a look at XLY to XLP, it had a pretty significant reversal here. Here, take a look. There it is. Big drop from this kind of blow off top move. We had gone so parabolic, and this is, remember, this ratio is 89% positively correlated with the S&P 500. The technology sector showing a little bit of weakness. Has been so strong here, but lately has been showing some weakness. You can see energy has been underperforming, but technology has been such a significant outperformer, and momentum had just crossed back above 100. So we were back in a good level, but again, we had gone so parabolic here in the last week. Now we're above the 8-day moving average, so we haven't turned south, and the few times that we've closed below the 17, we've come right back up above it. And October 10th was one of those days, and so we're not doing that today. So we're not nearly as bearish, or at least close to being bearish as we were then, and especially not as close as we were back over here in August when we were close to breaking below the 17-day and week for that matter. If I take a look at the weekly version of this, we are significantly bullish here. Let's if I can get this to work for me here. There we go. So look how far above the 50-week moving average the XLK to SPY ratio is. So really big parabolic move, strong relative strength, the momentum turning slightly higher. But again, look at the long upper shadow this week. Long upper shadows tend to be bearish. So you can see that there, you can see that here, you can see that here. I mean, again, they're not going to be super long, not as long as the lower shadows can be. But when you get those upper shadows like that, they can be a sign of weakness, especially again after having gone so parabolic and after being so far up above the 8 and 17 week moving averages. So it appears that we might be showing some signs of reversal, like signs of a rotation right now. And again, the breadth continuing to look poor as we got the rare Hindenburg omen signal. We got it yesterday. That was showing yesterday, and actually showed up again today because both the new highs and the new lows were up above the threshold, right? So in this case, 130 new lows, and the new highs still remained high enough, right? You need to be above 72, and we were at 93, so below the average, but still high enough to show a Hindenburg omen. So that's 3 now that we've gotten in the past few weeks, and suggesting again we might be kind of rotating out of risk appetite towards a period more of risk aversion here. So if you want to go more in depth, I do go more in depth on all of this in the full version of the Market Outlook video. The blog post that I pointed you to earlier, if you click this link and subscribe to our site at our foundation tier, just $29 a month, then that link to the blog post I showed you earlier will have the full Market Outlook video hosted on it, not just the preview that you're watching right now. So again, the free version, the basic subscription, gets you the free access to the blog post. The foundation access I just showed you gets you access to the full Market Outlook video, 30 minutes long, within the blog post, including the trade idea, including the Market Outlook Live, where we put the trade idea on in real time and then manage it going forward. So that's probably the most important thing, is to help you know when to get out and why. And then we also give you access to the trade tracker, where we track the results of all the Market Outlook trades throughout the year. And so again, all of that for just $29 a month, or it roughly works out to be about $1.40 per video. So not a bad value considering the value you get out of those trade ideas, as well as the knowledge of what's going on and how to apply it and what to expect going forward based off of what we're seeing here on the charts. So thank you very much for watching. Again, subscribe to our site, whether for free for the blog post or for that foundation tier for the video, for the full video. Subscribe to our YouTube channel and like it down there. Hit that thumbs up icon and like it. Comment on anything that stood out to you. Share it with anybody else you think would be interested in it. Follow me on Twitter for more content between the videos at DavidSettle42. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.